Hello everyone, good evening. Can all of you hear me? Hi, can all of you hear me? Akshata, Sanobar, Lazy, Asia, Kelvin, Prabha, Mohammed, Maria. Can all of you hear me? Okay, great. Okay, fine. Okay, so let's start with today's class. So the topic that we will be covering today is basics of accounting, financial accounting, management accounting, what is cost accounting, right? What is the relationship between them? We will try to see all of that, right, in today's session. So can all of you see the PPT I have uploaded on whiteboard? Okay, great. Let's start. And also, does anyone have any questions of the topics we have covered in my previous classes? Does anyone have any questions regarding that of the topics I have covered in my previous classes last week or yesterday? Any questions for me? Okay, Maria says no. Okay. What about others? Prabha, Mohammed, Kelvin, Asia, Lazy, Sanobar and Akshata. Okay, Mohammed says it's fine. Great. Okay, so let's start with today's class. So the first topic that we will be discussing is the accountant's role in an organization, right? All of us know that there is one accountant in the finance department in each organization, right? There is a specific department known as the finance department in which specialized accountants sit over there, right? Or the qualified CAs, whom we call it as the chartered accountants, right? They sit over there and perform some kind of a function for the organization, right? I hope all of in your organizations as well, where all of you are working, right? There is a finance department, and over there some accountants are working. So one question comes in our mind who are not from the commerce background: what job do they exactly do? What job do accountants exactly do? What is their role? What are their responsibilities? Right? How many of you have finance department in your organizations, or accounts department? Okay, Maria says me. Okay. Vijay says me. Akshata says me. Okay. Lazy, very good evening. How are you? Today we are discussing accounting. Okay. Okay. Mohammed says we have. Now did any one of you get the chance to know or see what work they exactly perform in your organization? What do they do all the day? What is the role of the accountants? Let's see how many of you get the chance to see. Preparing financial budgeting. Okay, forecast. Okay, recording financial statements. Okay, good. Keep a record of financial statements. Okay, good. And I am doing now recruiting plus the payroll. That's good, Rezi. Very good. Invoices, Akshata says. Yes, correct. Petty cash handling. Yes, that's true. So, all these roles are performed by the accountants in an organization. Now, let's proceed. I'm happy that all of you have a good background knowledge of what accountants usually do in an organization. Is there anyone who is working as a accountant in their organization? Hello Sunil, good evening. Welcome to IMTS. How are you? Thank you for attending my class today. Okay, Akshata is an accountant. That's great. Okay, Maria also. I am fine, Sunil. Thank you for asking. Today we are discussing about the basics of accounting, financial accounting, cost accounting, right? Hello Fahad, good evening. How are you? Welcome to IMTS. Thank you for coming to the class. Ashok, good evening. How are you? How was your day? Welcome to IMTS. Thank you for coming to the class. So, all those who have joined just now, today we are discussing about the basics of financial accounting, right? Little bit about cost accounting. Okay, Maria is doing multitasking. Okay, great. Good. Ashok, I am doing fine. Absolutely good. Enjoying my life. I hope all of you are enjoying your life as well, along with your studies. Okay, let's proceed. So the first objective that we will be learning is describe how cost accounting supports managerial accounting and financial accounting. Right. So generally there are three common branches of accounting. One is called cost accounting, one is called management or managerial accounting, and one is financial accounting. So these are the three common branches of accounting. Now first we will discuss each one of them in detail, right? But before that there are some concepts which you need to know. This is cost accounting, right? So these are the three major branches of accounting. Clear, everyone? Great. Let's proceed. Now, first of all, let's see what is management accounting or managerial accounting. It measures and reports the financial and non-financial information that helps the managers to make decisions to fulfill the goals of an organization, right? So this is the definition of management accounting. Clear? So with the help of this management accounting, which is also called managerial accounting, here the managers use the provisions of accounting information in order to be better informed themselves before they decide matters within their organizations, or which follows them to better manage and perform or control functions, right? So Let me write it down. CPA, CMA, FCCA related courses. Yes, right. I wrote it in the chat box. In management accounting or managerial accounting, the managers use the provision of accounting information in order to be better informed or better educated themselves before they decide matters within their organizations or with the clients, which allows them to better manage and perform control functions. Uh, there is one definition of management accounting which is given by IMA, Institute of Management Accountants. Let me write it down. Yes. This is the definition which is given by Institute of Management Accountants, which is a reputed body. So according to them, management accounting is a profession that involves partnering in management decision making, devising planning and performance management systems, and providing expertise in financial reporting and control to assist management in the formulation and implementation of an organization's strategy. So this is the definition which is given by IMA. Clear? We will see the difference shortly, Prabha, right? Let's proceed. To the next slide. What happened to the slide? It's loading on my end. Don't know what happened. Once again, this is slide 2. This is slide 3. This is the definition. The fourth slide. Anyway, let's have this slide loading. We will add another slide. Okay, so to who has joined just now, Ajit, Nixon, and Lakshmi. Can all three of you hear me? Lakshmi, Nixon, and Ajit. Okay, account. So good evening to all three of you who have joined just now, and welcome to IMTS. The topic that we are discussing today is the basics of financial accounting, right? Okay, account. What is account? It is a unit of information that represents business records. There are 5 types of accounts in general. One is asset, second one is liability, then equity, then revenue, and then expense. I hope all of you are familiar with these 5 terms. What is an asset, what is a liability, what is the equity, what is the revenue, and what is the expense, right? I hope I need not to explain to all of you these basic terms. Is there anyone who is not aware of these terms? Anyone in the class? So I will explain to him, or else we will proceed. No one? Okay. Let's proceed. Now, what is accounting? It is concerned with the use of which the records are put, their analysis are made, and then the interpretation is done. It is the process of recording business activities that make changes to accounts, like sales of products, revenue from services earned, buying the products or services, and so on, right? So it is a systematic way of recording the financial things in the form of accounting forms or sheets or various formats. Now the attributes of accounting. Attributes mean the importance of accounting. It is the art of recording business transactions, right? All the organizations systematically record their all day-to-day business transactions, so that in future, if they want to see the records of the previous transaction, it will be easier for them to manage and find them. It is the art of classifying business transactions, right? The transactions or events of a business must be recorded in monetary terms. What do we mean by monetary terms? Everyone. Cash, profit and loss, checks and balance, yes, very good. Monitored by someone, yes, right? It is the art of summarizing financial transactions. The results should be communicated to users. Then the functions of accountants: systematic record of business transactions, protecting the property of business, communicating results to users, compliance with legal requirement. Users of accounting information: who all in the organization uses the accounting information? The owners, the suppliers or the creditors, the investors. Investors before investing wants to see the balance sheet of any organization, whether the organization is in profit or loss, or how much quarterly profit they have made. So all those informations the investors go through before investing or buying the company's shares. The employees, government, the public, research scholars or agencies, and the managers. So they are the end users of the accounting information. The branches of accounting, I already told you, there are 3 branches. One is the financial accounting, which keeps the record keeping they do. Then we have the cost accounting, which is mostly into price fixation and operating efficiency. And then we have management accounting or managerial accounting, which does the analysis for decision making. Any doubt so far? Can all of you give me an example of financial accounting? Let's see. Everyone, give me an example of financial accounting. Journal record, balance sheet, yes. Recording journal, sales, receipts, payments, invoice, etc. Keeping the track of sales, correct. Let's proceed to the next slide. Advantages of accounting: replacement of memory, evidence in court, right? It is a written proof. Tax purpose, comparative study, sales of business, assistance to the insolvent and for various clients or various other parties. If they need it, all the things are available in written in a systematic manner. So whenever any one of them needs any information, they can easily access it. Now let's see the limitations of accounting. Records only for monetary transactions. Effect of price level changes are not considered. No realistic information. Personal bias of accountant affects the accounting statements. It permits alternative treatments like LIFO and FIFO. LIFO means last in first out and FIFO means first in first out. No real test for managerial performance, and the information stored are historical in nature. These are the limitations. Now let's see some of the basic accounting terms or terminologies which we will be seeing a lot of time. So it's better to clarify it in the beginning before going deep into accounting. Sure, Nixon. I will go a bit slow. Okay. So the first term is business. All of us are aware a business is what? It is an organization created with the objective of making a profit from the sales of goods or services, right? So the owners of the business organization creates a company, they hire employees, then they divide it into various departments, sales department, finance department, right, IT department, right, and the goal of all of them is to provide assistance in running that business. Why do we run the business? So that the owners can make money out of it. Also, the employees get the benefit of getting a job. Second is bookkeeping. What is bookkeeping? Everyone, it's a very popular accounting term. It is the act of systematically recording the financial transactions affecting a business. Ledger meeting, yes. Can all of you give me an example of bookkeeping? The balance sheet or the quarterly balance report, all those comes under bookkeeping. Recording any financial related, yes, sales, correct. So all those comes under bookkeeping. Next one, clear? Purchases, yes, everything that we record comes under bookkeeping. The income statement, right, the revenue statement. Okay, then we have the book value, the net amount, that is the original value plus or minus any adjustment such as depreciation showed in the accounts for an asset, liability or owner's equity item. Clear? So book value is the net amount which is showed in the accounts for either an asset or liability or owner's equity. Okay, also tell me everyone whether all of you are aware of that basic accounting equation. Yes or no? What is the basic accounting equation? Please write. Let's see how many of you know. In terms of assets, liability and equity. Yes, Parth wrote it correct. Assets is equal to liability plus equity. Very good. Right, so there is a list which you need to remember, that which all terms comes under assets, which all terms comes under liability, or which all terms comes under equity. For example, that if you bought a share for your organization, then it will come under your equity, right? Similarly, if you bought say a new property, noise at your end. Uh, 1 second. Is it better now, Prabha? Fan, yes. 1 second. Okay, I have closed the fan. Okay. So this is the basic accounting equation. Then we have a calendar year. Calendar year, which is also known as a financial year, right? In India, it starts from 1st of April and it ends at 31st of March, right, of next year. So calendar year and entities reporting year covering 12 months. Is it same in UAE? The financial year? Like in India, it starts from 1st of April to 31st of March. Okay, here, okay, over there it's December. And the starting date is 1st of Jan. Okay, fine. Got it. Okay. Someone is saying it's June. I don't know. Most of you are saying it varies from company to. Well, it varies from company to company, but the government over there have decided some date. It is not decided by the company. Anyways, one term we forgot. Transactions. Transaction, all of you are aware, is the exchange of goods or services between a business or individuals. Can also be other events having an economic impact on a business. In our company in Muscat, it's 31st of December. Okay. Journal, also very popular accounting term, journal. What is a journal? A journal is a record of financial transactions in order by date, from date to date. Let me show you an example. One second. Let me see if I can double entry booking system. Let me show you an example how a journal looks like. Let me see if I can paste it now. 1 second. Don't save. One second. Let me show you an example of a journal. Yes. Can all of you see the journal? This is how it looks like. right? So in the first column we have a date, right? Then we have the accounting activity description, like on 1st of August, this company has debited 50,000 from its cash, and then they have credited 50,000 to its note payable, right, because they borrowed 50,000. Then on 3rd of August, they bought equipment for which 30,000 is debited, and then they submitted 30,000 in cash. Is this called historical transaction record? Yes, Nixon. It is also called historical transaction record, where each financial activity is recorded along with dates. Clear, everyone? Then we have a journal entry, the entry that we do in the journal, a recording of a transaction where debit should be equal to the credit. Now if you see over here that all the debit value is equal to the credit value for that particular date, like here it's 30,000, here also it's 30,000, here it's 20,000, and here if you add both of them, both the credit values 18,000 plus 2,000 is 20,000. So these two values should be same. The credit value should be equal to the debit value for that particular date. Clear? Then we have a ledger. Ledger is what? It is a summary statement of all the transactions relating to a person or an asset or an expense or income which have taken place during a given period of time and show their net effect. Clear? Let me show you an example. Let me try to show you an example. So that it will be more clear to you. It's not coming clear. One second. Okay, just yeah, I'm uploading it again. Yes, I think now this one is a bit clear. This is your general ledger. You have to see it in small. Is it visible? Debitors control, creditors control, sales, cost of goods sold, stock control, the bank, the sales, creditors control, debitors control. If I zoom it, its quality will get worse. Okay, just excuse me for a second. I'm just coming in a minute. Okay. Okay, I'm back. So this is how it looks like. It's a bit small. Let me try to zoom it. Can you see it now? Debitors control in the first row. In this for October 1, we have a opening balance, the sales, right, like that. You can just Google it and you will find a lot of samples of ledger. Right. Then we have a trial balance, a listing of all account balances that provides a test of whether the total debit equals the total credit or not. Right. Then we have the revenue. It increases in a company's resources from the sales of goods or services. Then we have a balance sheet. All of you know, a balance sheet is an itemized statement which lists the total assets and total liability of a given business to show its net worth at a given moment in time. Right? Do you want me to show you a sample of balance sheet as well? I hope all of you have seen the balance sheet. Then we have the capital. Capital is what? The property or the money used and owned by a business and used to acquire future income or benefits. Then we have a debtor. A debtor is a person who owns the money. The amount due from him is called the debt. Then we have a creditor. A person to whom the money is owing or payable is called a creditor. Credit, it is an entry on the right side of a ledger account. Right now, as I have shown you, credit should always be written on the right side in any statement or any journal, any ledger account. Credit always comes in right, debit always comes in left. Then we have the goods. This includes all the articles, commodities or merchandise in which the business deals. Thus, cloth would be goods for a dealer in cloth, furniture would be goods for a dealer in furniture, and so on. Then the assets, it is the economic resources owned or controlled by a person or company. Net assets, it is the difference between the assets and liabilities, or assets minus liability. Liquidity, the availability of cash or ability to obtain it quickly, also used to determine debt repayment ability. Goodwill, brand, an intangible asset that exists when a business is valued at more than the fair market value of its net assets. Right? And then the interest, the cost of the use of money. Current. We also have current assets. Current assets are those assets of a company that are expected to be converted to cash, sold or consumed during the normal operating cycle of the business, usually 1 year. For example, cash, accounts receivable, short-term investment, US government bonds, inventories, prepaid expenses, all these comes under current assets. If you see the balance sheet, you will find all these terms: inventories, bonds, short-term investments, account receivable, account payable, like that. Then we have the current liabilities to be paid within 1 year of the balance sheet date. Right? Drawings, any amount or goods withdrawn by the owner of a business for personal use is called drawings. Then we have the bad debt. It is an uncollectible account receivable which cannot be collected. Then the loss. A loss is an expenditure without any benefit to the concerned. On the other hand, expense is incurred to result in some benefits. Thus, amount spent on lighting is an expense, but loss due to fire is loss. Yeah? Any doubts so far anyone has? Right. Okay, so what I will do, we will stop over here today 15 minutes early because I have to catch a train after 20 minutes. My train is after 20 minutes, right? So I have to leave for the station. What we will do, we will cover this 15 minutes tomorrow. I will teach you for 1 hour 15 minutes tomorrow, right? On the same topic, accounting. We will continue with this accounting tomorrow as well. Okay. So thank you very much everyone. Good night. Take care. See you tomorrow. And please fill the feedback form at the end of the class. Thank you. Thank you everyone. Bye bye.